Hello, good morning and welcome to ET Now. You're watching Buy Now, Sell Now with me, Varun Hirimath, and along with me, Karunya Rao. Let's take a look at the headlines for this morning. Unfortunately, Nifty is below 13,500. We've breached, we've sold off. Weak global cues, Dow sold off yesterday as well. S&P also sold off. Nasdaq was the only global index to buck the trend. So Asia was weak this morning. So here as well, we're facing some pressure for our markets. Particularly, it's the PSBs and the FMCG index are among the top draggers. Broader market has also declined for the first time in 3 days. So it's not just your large cap stocks, but it's also your small caps and mid caps which are participating in the sell-off. Only two sectors today that are firmly in the green, worth mentioning: pharma sector and auto sector, somehow managing to buck the trend. Let's see how they hold out through the rest of today's session. We then have a particular stock that's made its way into headlines today, majestic dividend for Majesco. They've approved an interim dividend of 974 rupees per share. The payout is going to be a total of 2,800 crores almost, and the balance cash reserves are estimated at around 103 crore rupees. We then have divestment drive back in focus. BPCL bid evaluation meet is on today. Vedanta, Apollo Global, I2 Capital are apparently all in the race according to reports. So we'll see. They're going to vet 3 EOIs today. We then have some brokerage cheer as well that we like to bring to your attention. HSBC maintains its buy on Indian Hotels with a target at 151 rupees per share. So they think Indian Hotels is going to go back to its lifetime high. Structural changes favorable for Indian Hotels, and banquet business sees a good pickup. So it remains a top pick in their portfolio. We then have post the Burger King listing, which is again today up a tremendous 16-17% post the rally we saw yesterday. IPO streets really heating up. We have Mrs. Bector's Foods IPO opening for subscription, price band of 286 to 288 rupees a share. Massive business that caters to the QSR industry. Do have your own study of it. Finally, one major focal point for equity markets worldwide and here as well, the vaccine rollout. So it's a key thing to keep an eye out for. India is going to begin a large, broad-scale vaccine rollout. Let's now quickly go across to Infosys Chairman Nandan Nilekani. He's speaking. Let's listen in.
And use technology. And we call this broad thing as the digitalization of the economy. As Padma mentioned, COVID has accelerated this digitization, where today we have millions of children doing classes online. We have grandparents using, video to talk to their grandchildren. Health services are provided online and so on. So fundamentally, what we have seen because of COVID is the compression of the digital way of doing things from what would have taken years to what is now taking weeks. But to look at this in context, we need to have a sense of what happened historically. For a long time, technology was primarily focused on the enterprise. Until about the mid-2005-06, it was essentially enterprise driving technological innovation. However, with the arrival of the iPhone in 2007 and subsequently the Android operating system, the smartphone became the essential vehicle or the engine of innovation in the world. So the consumerization of technology led to a dramatic change in how digitization would change us. Now, some of the things that this led to was the consumerization of the user experience. So people who use their enterprise apps wanted to have the same ease of use that they had on their iPhone. It led to the rise of big data and AI as the gigantic big tech companies used data to figure out what their consumers needed. It led to a demand for cloud as Amazon, Google, and Microsoft started offering cloud services based on their own experience in running these large platforms. It led to a demand for modernization of existing applications in large enterprises and many other things which are all responsible for a big change in the way companies looked at technology. Today, we are showcasing 3 of these trends. The trend towards the cloud, adoption of cloud, which is a mega trend that is affecting all enterprises. The need for cybersecurity, which again has become even more critical as more and more applications get exposed on the public internet. And the massive need to retrain and reskill our people And we're showcasing that through, I believe, the Wingspan presentation. All these are very, very important because these trends which emerge from the consumer side of technology are now in the last 4 to 5 years penetrating large companies in a big way. And this is a huge challenge because historically, these large companies have had legacy systems which have been around for many decades. They run on mainframes, they run on older languages, older operating systems. They tend to be monolithic. And the new world requires a much more agile infrastructure, much more microservices, much more mix and match, much more service on the cloud, and all the various other things that we have going. And this is a huge challenge for companies. And we call this challenge as crossing the software chasm, because you have to go from where you are, which is your current mode of operations, to where you want to be, which is the future mode of operations. And you want to make this transition from the CMO to the FMO without affecting your current business, without changing anything to your customers. So the customers are not aware that behind the scenes, you're going through this massive reinvention of your technology platform and the way you adopt digital capabilities. And that is really the challenge that most of our big clients and all companies in the world are facing. And this cannot be fixed just by hiring a lot of people or spending a lot of money or doing a big acquisition. This has to be fixed by fundamentally reinventing the corporation. And that is something which Infosys has been doing for the last 3 years. And under the leadership of Mr. Salil Parekh, Infosys has done a terrific job of completely reinventing itself. So in the last 3 years, for example, with the implementation of a learning platform, Lex and Wingspan, we now have all our people have been essentially reskilled and are aware of the latest technologies and have access to learning anything that they want so that they can make the customers better. Large-scale adoption of agile techniques in a distributed way has enabled our processes to become more agile and able to deliver quickly to the customer. We have completely reimagined our digital infrastructure and created what is called as the live enterprise. The Infosys Me application has transformed the engagement of employees with the company, which came in very handy in this pandemic. And then we have our collaboration through Meridian, which has enabled many, many things to be done while working remotely from home. All these investments have given the company resilience. As you have heard, we had invested in working from home as a concept for all our employees long before the pandemic. And then when the pandemic struck, it was very easy for Infosys, related to many other companies, to transition its 240,000 employees in 40 countries to work from home. And that was because of the existing investment in digital technology, the existing investment in network technology, and the existing investment in creating a cybersecurity framework which allowed everyone to work from home. And this is the importance of the future, which is how do you create optionality in your architecture, optionality in the way you do business, so that you can deal with different things that are happening. So strategy often is not about saying, let us do A or let us do B, but actually creating the optionality that based on the circumstances, you can do either A or B. And working from home is an example of that, where we could work from the office or work from home because of the optionality, the leverage, the flexibility and sophistication of the digital platform that Infosys was using. So this use of digital inside Infosys has pervaded all aspects of Infosys. And that is one of the reasons that we have the knowledge that we can take to our clients. So when we talk to our clients, when our leadership, our management and leadership talk to our clients, they're able to talk not just what is the theory of change, but actually demonstrate that Infosys is the change that we are talking to our customers about. And the fact that we have taken a company which has billions of dollars of revenue 240,000 employees, 65 subsidiaries, 40 countries, and being able to transform it into a digital native kind of a company gives our clients confidence that we can help them in the same journey. So today, as we discussed, I believe we will showcase some of these developments. We have tried very hard in the last several years to make sure that we create technology for the future, and you will get a glimpse of that today. And Infosys, the management, the board is committed to transforming of Infosys to become even more relevant to our clients, provide them the ability to navigate to their next, and truly be the partner of choice in the biggest change that is happening in their business. And as we said, the COVID crisis has only accelerated this and enabled the speed of which change has to happen. And I'm sure that Infosys, under the leadership of Salil Parekh, will ensure that it continues to prosper and thrive in this new world and deliver its promise to its customers. Thank you very much.
Thank you, Nandan. Tour of the Infosys Living Labs. This is a dynamic space, crackling with the energy of 90 of our most brilliant minds from...
All right, that was the comments coming in from Nandan Nilekani. He's talked about investments that have given the company resilience. It was very easy for Infosys to transition employees to work from home because of existing investments. The strategy here is about creating optionality based on circumstances. You can either do A or B, and of course a host of other things about how in the last few years dramatic changes have taken place in the way the companies manage and use technology. He's seeing digitization of the economy quite drastically, and then COVID, of course, he said, has added or rather accelerated the digitization of the economy. But let's move right back to Buy Now, Sell Now. Kunal Bothra and Saurabh Jain are with us this morning. Hi, gentlemen. Thank you for waiting by. Kunal, coming to you, you have two low-risk ideas today.
Absolutely. So I think very rare to find two low-risk ideas, but then I think for the viewers, I think this could be something very interesting. In a market which is now suddenly become volatile, there are two stocks which I believe are standing out even in this kind of a market. So which is why I would term this as a slightly low-risk idea because of their contrarian nature and the behavior with respect to market. The first one is Sun TV. Now, interesting, charts. We've been discussing media stocks, quite extensively, that how many of these media stocks are showing signs of strength. But look at the charts for Sun TV, and I think it's been an exemplary chart since last 3 weeks, from 420, 425 kind of support levels, where the stock formed a double bottom from the 200 moving averages. It has just bounced back, quite strongly now on the verge of making a very strong, medium to long-term pattern breakout as well. So would suggest about Sun TV for a, potential target closer to 505 would be very, very short-term kind of trades, and stop loss could be kept at approximately 488. The second would be Bharat Container Corporation, a stock which has shown a lot of promise, but somehow, it's not, delivered the way in which many of these other PSU stocks have done. The stock is still above its 200 moving averages. It's been showing consistent attempt towards a breakout of 410, 420 range. But I believe this time around as well, you could probably see a successful breakout for Container Corporation, given the kind of strength the indicators are showing at current juncture. So would suggest about Container Corporation as well. Short-term targets could be kept at approximately 430 mark and stop loss at 400.
So that Kunal, getting your picks in. Hi Saurabh, good morning. What's on your radar today as far as a high risk and low risk idea goes?
I'll be recommending both low risk ideas. First would be Canara Bank. We have a target of about 150. If you look at the bank is showing promising growth, especially in the retail advances. There has been improvement in the credit quality, asset quality. The net NPA have come down to approximately 2%. Provision coverage ratio is on higher side. Recently, they have raised money of about 2,000 crore through QIP. So I'm expecting that the bank would continue to post good numbers. We have a target of about 150 rupees. Second stock would be Prestige Estates. We have a target of about 315 rupees. It is a Bangalore-based real estate player, seeing good amount of traction in the real estate market. They have posted good numbers in the September quarter. In fact, growth was there quarter on quarter. The company is also monetizing some commercial assets by selling it to Blackstone and raising to about close to about 9,000 crore, which would help them to reduce their debts and focus more on the real estate projects. So we have a target of about 315 rupees.
All right, let's talk about or rather address some viewer queries as well. First up is a Twitter query from Nageshwar Rao. He has 900 shares of ONGC, which he bought at 129 rupees a piece. He's been holding on to it for the last 1 year now. He also bought 1400 shares of NMDC for 134 rupees each for the last 3 years, is something that he has been holding on to. He wants to know whether it's a good time to exit or perhaps load up more of any of these two names that he talked about if and when there are dips and corrections taking place. Kunal, coming first to you, if you could take it one by one, ONGC followed by NMDC.
So I think, Karnya, I think the investor has, bought at, I would not say much steeper kind of valuations, but, the fact that he's been holding on since last 1 year for ONGC and approximately 3 years for NMDC tells, the extent of patience the, viewer has. So I think in that regards, this is the first time we're showing signs of, we're seeing signs of very strong comeback for the PSU pack. Now, ONGC, if you look at it, as first stock, I believe has made a very strong comeback from those 65, 70 kind of lows, with the stock was trading in the month of September, October end. I think from there on, it's climbed up extremely well for itself. I believe that this could be a start of a strong PSU uptrend. So, you've been very, very patient enough for the PSU stocks. And I believe that in this kind of a rally, you should not give in so easily. I believe that the strategy over here should be, to try and add up a few more quantities for both of these names. In fact, if you can probably add maybe a couple of other PSU names as well at current juncture. I think the potential upside could be far more higher because, what these, stocks have shown in the last 1.5 or 2 months is completely contrarian to their, earlier nature since last so many years, where these stocks used to be beaten down with any kind of a rally. They used to be short on rally kind of candidates. So both ONGC as well as NMDC, I think, are showing signs of very strong potential. I would suggest that you should look to average out your quantity over here, try to decrease your cost price, but again use corrections to try and average out your quantity further in both of these names.
Okay, what about you, Saurabh? How are you assessing the fundamentals of both of these companies?
My take would be hold on both NMDC and ONGC. I'll talk about ONGC first. See, there is a good amount of rise in the crude oil prices because of the expectation that the things would normalize in the world economy when the vaccine will come. And we have seen good amount of run up in the commodities prices and the crude prices. Crude is steadily inching above close to $50 now, which will help in increasing the ONGC realization. I am expecting that commodity prices will stay firm, and there would be higher profits for the ONGC. And I am expecting that this company would do well. So my take would be hold on ONGC, and same way on NMDC also. If you see the rise in the metal prices and the way the company has raised iron ore fine and lumps prices in the month of November twice, and in the month of December, this month also they have raised prices 2 times. So it will help them in realizing more money. And what is market is discounting same thing because of the better prospects and better earnings ahead. My take would be hold on both these stocks.
Hold on both those from Saurabh. On that note, let's slip into a quick break here on Buy Now, Sell Now. Thank you to both our guests for joining in. We'll be back in just a minute.
Welcome back. You're still watching Buy Now, Sell Now. Let's pull up the Buy Now, Sell Now stock cloud real quick to understand which are the stocks that are buzzing away in trade and you need to keep on your watch list. Starting with Burger King, a fantastic up move seen on the second day on the trot after a stellar listing yesterday on the last read. The debutant continues its up move fantastically today as well, up a solid 20%. IHCL, well, HSBC came out on a bullish note on this one, and that's the reason why we're also keeping IHCL on our watch list today. Majesco, of course, as we all know, it has hit a record high after announcing that majestic dividend of about 974 rupees. You also have BPCL on the back of the all important EOI related updates. Ruchi will be joining us eventually to give us more details about the EOI and what exactly is the evaluation committee talking about. IDBI Bank, NMDC, Dilip Buildcon, L&T Tech, IRCTC, all of them are on our checklist today. But yeah, Ruchi is here with us to tell us more about the BPCL's EOI. Ruchi, tell us, what are you picking up, and how soon can we expect some substantial clarity or development on BPCL stake sale?
Well, the second step in terms of the privatization process for BPCL is going to happen today. We're given to understand the evaluation committee that has members from DIPAM as well as Oil Ministry today will get together to look into the kind of expression of interest and assess the expression of interest that has come in from three players as far as BPCL is concerned. Remember, Vedanta, Think Global, Apollo Global as well as Think Gas are the three players that have so far expressed interest for the 53% stake in BPCL. We're given to understand that today the evaluation committee is going to meet and basically take a call on how to move forward. After this, the data room for BPCL will be opened up, and only then the technical and financial bids will be called. So today you can safely say is the second step as far as the privatization process for BPCL goes.
Right, Ruchi. Just one more question from our end. You just said it's the second step. Excuse me. So how many steps are there, and what's the total timeline visible now for investors who are keenly looking for this to happen? Would you say that you now have a clearer picture of when this process might conclude?
Well, in terms of the conclusion of the process, Varun, I'm given to understand it will take about 3 to 4 more months. We already know that 3 players have expressed interest. Now, this evaluation committee is going to get together and see whether these three parties that have come in, 3 players that have come in, whether they meet the criteria that was set out by DIPAM in the first place. If they meet that criteria, then the data room for BPCL will be opened up. These companies will be, these firms will be given about 45 days period of time to assess and take a call on the kind of bids they want to put, and then a time will be opened up, a day and a time will be given to these players for technical as well as financial bids. The government has already said that they want to sell their entire 53% stake in BPCL. So at least the ball has, we can safely say, has started rolling on that front.
Hi, Ruchi. What about Shipping Corp? What are you picking up with regard to the government panel clearing EOIs for the same?
Well, we at ET Now had told our viewers last week that the Cabinet Secretary-led panel will soon be finalizing the expression of interest for Shipping Corp. This is the second company that the government is looking at privatizing, a profitable PSU. We're given to understand on the back of that, the stock of Shipping Corporation also at the highest point of the day. It was in the negative territory just a while ago, but we're now given to understand that the Cabinet Secretary-led panel yesterday gave a final go-ahead to the expression of interest for Shipping Corporation of India. I'm given to understand over the next 3 to 4 days, there is a possibility that the government will be putting out the expression of interest for Shipping Corp, and that will ensure that the ball gets rolling on Shipping Corporation's privatization process as well. Having said that, a whole host of local and global players have already made a beeline for Shipping Corp, including Dubai's Dubai Port World, along with domestic players like Adani, as well as SR Shipping. It's a story that we did here on ET Now as well. We're given to understand that once the expression of interest is put out, then a date will be set out, and according to that, the players will have to express their interest. But we can safely say, as far as the government is concerned, they have made up their mind in terms of what is on the table as far as the expression of interest for Shipping Corp is concerned.
Okay, Ruchi, thanks so much for joining in. So Shipping Corp also making headway, and we know that they have a huge land bank. So I believe the divestment is going to be done in such a way which really separates the shipping assets from the land assets. But let it be known that they hold a huge value in the kind of real estate they have. So it'll be interesting to see who exactly participates and how that breakup is actually provided. But let's turn away from divestment now, back to a stock that's currently in focus. They've just paid out a massive dividend of 2,800 crores. It works out to around 974 rupees per share. I'm talking about Majesco. Poonam's going to walk us through how this money actually came into the company and was made available to shareholders, and some other interesting details. Over to you, Poonam.
Well, Majesco today, in fact, has announced a high interim dividend payout of rupees 974 per share. This is amounting to close to around 2,788 crores to shareholders just by way of interim dividend payout. And the balance cash reserves are estimated at rupees 103 crore rupees. In fact, do note that just in the last few months itself, Majesco had gone ahead and got proceeds worth 3,072 crore out of selling the Majesco US, and at that point in itself, Majesco had announced to the shareholders that they would be in fact distributing the proceeds to shareholders by way of buyback as well as by way of dividend. They had already announced buyback worth rupees 631 crore to the shareholders at rupees 845 per share, and the balance amount was supposed to be paid as dividend payout in order to reward the shareholders and also for eventual delisting of Majesco shares. In fact, the high dividend payout would be paving the way for eventual delisting. And also do note that Majesco had already stated earlier that the distribution plan has been proposed based on shareholder categories, speedy distribution, tax efficiency, as well as equitable distribution between buyback as well as dividend proposals. So yes, and high interim dividend payout coming in for Majesco shareholders at rupees 974 per share.
Okay, well, Majesco shareholders will definitely be happy about that massive dividend coming in. So good news for them. And on that note, time for a quick break. We'll be back shortly. Don't go anywhere.
Welcome back. You're still watching Buy Now, Sell Now. As many countries across the globe are starting their vaccination drives, India is also getting ready for vaccinating about 100 to 200 people in each session per day. The government has issued guidelines as well for the mass COVID vaccine drive. Let me just tell you or walk you through the key guidelines that have been issued under the phase 1 of vaccination. It is planned to vaccinate about 30 crore people. Now, how is it that how is it likely to take place? Firstly, only pre-registered beneficiaries will be vaccinated. You cannot show up at a session and a session site and ask for an on-the-spot vaccination. 100 registered beneficiaries will have to be vaccinated per session. No on-the-spot beneficiaries will be entertained. They want to vaccinate 100 to 200 people in each session per day. They will also be monitoring these beneficiaries for about half an hour after administering the shots. CoWIN, which is a digitized application, it will be used to track all the enlisted beneficiaries for vaccination. The vaccination team will essentially consist of 5 members, and if the site allows in terms of infrastructure and space, they could add another vaccinator officer to that. 12 photo ID documents are needed for self-registration, the likes of passport, driving license, Aadhaar card, etc. And these people, the beneficiaries, will be vaccinated as per a prioritization list. Healthcare, frontline people, people who are above 50 years of age, these are the categories and segments which will be vaccinated, or a vaccine will be administered to them on priority basis. So these are the essential guidelines that the government has rolled out initially, just to get on with the first phase of vaccination, under which they want to vaccinate about 30 crore people. With India preparing to enter phase 1 of mass vaccine drive, we caught up with Dr. Sanjeev Bagai. He is the MD of Nephron Healthcare, and we tried to understand how the road ahead could look like. Here's a slice of that conversation.
50 or 60 years internationally, and more so in India, perhaps this would be the most widespread, most coordinated and most detailed inventory management and inoculation drive at least India has ever seen. This is unlike anything else because this is unprecedented time. The vaccine which will be coming out, we most probably be, once the approvals are in place, we would be using the adenovector-based vaccine, which is from Serum Institute, which has finished phase 3 in the initial interim data. And it is pronounced to be safe, effective, good efficacy. Now the devil will lie in the detail, and the exact effectiveness of the protocol would be in the local logistics. Logistics for me is very often used loosely as a term. This will include cold chain logistics. It will include the equipment management and refrigeration, cryogenic gases management, the transportation, the cargo, the freight, the vans, the trucks, distribution to the point of care, the delivery control, the inoculation itself, the manpower, which has to be a skilled manpower because it's intramuscular injections. Mind you, there will be 2 injections now and after 4 weeks, to gather the crowd again after 4 weeks, to keep the data. And we have to use the greatest technology. India is already engaging 2 of the top IT companies available in this part of the world.